Good turnaround Tuesday, everybody. Hello, Gorkum, Alexander. Mary, how are you? All you warriors. Ryan's here today.
Morning, Dale. How are you?
How are you, buddy? So
good, mate.
Good. I think this is where my charts are. Okay. Okay. See my charts, Ryan?
Yes, mate, I do.
Okay, thank you very much. So we had some reversal days in stock indexes yesterday. One line that could be pretty important. You see this right here? Yeah. Now, you probably have no idea where the heck this line comes from because we haven't looked at this formation for, I don't know, maybe a year after COVID, but it's a big megaphone. Okay. So, I mean, this was definitely, and people were watching this, when they were getting bearish back here in, late 2021 and, again, an overthrow, but, a shade under the 4,100 neckline, so far, I think you have to say that the 4,100 breakdown, it didn't happen. You just, took it out. What was the low yesterday? 40.61. So I think we made new lows by 20 handles. So precarious, but to me it looks like it's going to be a big move either way. So most people would bet down with the Fed tomorrow. What are you thinking, Ryan? Because I'm seeing glaring divergence in the 10-year here. Look, check it out.
Yeah.
So, some non-confirmations going into the Fed. The dollar looks like what happened yesterday in the market, and even today, we were lower earlier. That there's not a lot of fear about the Fed. Even the dollar is coming off, yen's coming off. So, yeah. Are they going to temper their hawkishness after the rate hike?
I think the market is a bit has gone a bit too far in hawkish expectations.
Okay.
Talking about 75 pip hikes and 50 pip hikes for 4 consecutive meetings and that sort of thing. We know the Fed want to play catch up. We know they are playing catch up. Very much see a 50 pip hike tomorrow. Anything bigger, I think, would be a bit of a shock. But it's the thing, the Fed aren't going to turn around and say, oh, we're not going to hike rates anymore. But I think they're perhaps going to temper the market expectation for how much they'll hike.
How about on QT?
Yeah, well, that's obviously the other question. How much are they going to start drawing down the liquidity? Is it going to be a lot, or is it going to be a slow process? Are they going to let it roll off? Are they going to actively sell? All that comes in, and that's probably the bigger conversation to have over the rate hikes.
Right.
But we know it again. We know it's coming. In one way, shape, or form, we know it's coming, and the fact that stocks haven't collapsed over that suggests that we might get a knee-jerk reaction once we get the actual details, and then things will settle down again. Can I see stocks crumbling to 35, 3,800 just on QT? I think that'd be a bit of a stretch because, as I say, the market knows it's coming. That we knew the punch bowl was being taken away last year, and here we are where they're actually maybe turning around and doing it. So I'm not sure how much there is left in that trade.
Yeah, and when you think about it, from COVID, when the bonds they stepped in and bonds peaked at 180 and now we're at 117. You're looking at 40% declines in 20-year treasuries. Is that a sovereign debt crisis?
No, it's not.
What would make it a sovereign debt crisis? Sure. Go ahead.
If the US couldn't pay their bills.
Okay. Well, rates go up during a sovereign debt crisis. So, isn't that part of it is that, rates have to go up dramatically to attract capital?
Yes and no, because you get different types of investors. You get investors who seek yields in bonds, and look at dollar yen. Where are you going to park your money now? You're going to park your money in 0.25% JGBs if you're a Japanese investor, or you're going to stick it in 3% US 10s, even with inflation. So there's lots in the mix. You've got to think about investor flows, where investors go for money. You've got high risk investors, low risk investors. But we were expecting yields to do this last year when inflation started coming up and we started talking about hikes. The move up in yield. I know Stel and Steve were expecting it as well. And finally, it's happening, because I think that this time the market has realised, well, A, that there actually is inflation, but B, they now know that the Fed is going to hike rates and remove all the easing. Whereas the last time when we came out the GFC, 2015 through 2018, the market was still a little bit cautious whether they were going to go completely back to neutral rates. And we know 2019 they were cutting rates, if you remember.
Yeah. So I mean, people that doubt that Head and Shoulders ever work, there you go. They do. The ones that work are the ones you don't trade. The ones that don't work, you're trading them. So, I mean, this measures 90 under par for the bonds.
Yeah.
That formation.
What does that put yields? Somewhere 3.5%, 4% perhaps?
Yeah. Up there. Mortgages.
And they can get there. It all depends on the Fed. I saw a piece out today, or someone saying that an ex-Fed staffer saying that the Fed may have to hike to 5-6%, the same level as inflation. I can't see them going there without putting tons of stress in the market. But who knows?
Does any of this, when you look at the monthly, the pound doesn't look as bad. Daily, I don't know. We got this little pullback in the dollar to buy again. I can't buy it. I can't sell it. I don't know what to do with it.
We've got this pause before the FOMC where the market is. You could have retired trading. Could have retired trading 0020s in euro dollar for the last 5 days. It's sitting on that line. 105, 104.90. It's proving solid support, but as I said this morning in the chat room, it's still in the balance. 105 was a big level that I was watching for weeks, as you well know, when we were up at 108s, 109s. Here we are. It's pretty much holding the support, but you get a really hawkish Fed. We'll be sub that in a blink.
So I mean, today is just a evening up type day. You really can't make too much out of the action for directional trades, because your charts may not mean anything during the presser or the announcement for a while tomorrow.
Yeah, this is one of those times of the month where, as traders, you got to practice your patience, because you're not really, unless you've got a longer term strategy at play, you're not going to really take a side right now, knowing that the risk is binary tomorrow and that it's a big meeting. Talking to the pound, we got the Bank of England on Thursday. Expected to hike there 25 pips, but again, people in the UK are saying, well, is this going to send the UK into recession? The Bank of England, do they know exactly how much they're going to hike by? For those who are not in the UK, we've also got local elections on Thursday, so there's a bit of risk for the pound there as well.
I'm voting for you.
I wish I was running.
Well, we know you're running, but it may not be from office for office, right?
Yeah, I'm running
away. What was your reaction to RBA? Currency got a nice pop, trying to hold on to gains here. Nice gains.
Yeah, but again, I would have expected this much higher. I didn't expect that drop down all the way down from the 76s. Into a bank, another central bank that's hiking. Them and their 2024 hike call. That I've been calling out for months and months, probably since I started at ForexAnalytix. I was calling that call rubbish. So here they are, May 2022 hiking.
But I remember a week or so ago, Ryan, you said, I'm even, turning negative on Aussie. I think it
Yeah,
was one. Yeah, so you had the vibes this could happen. So do you think they have to clean out the stops under this double bottom before we get a good low?
I think again, this is on the Fed. And if the Fed is hawkish, if we can't clean out that low, or if we have an attempt, maybe we get a little flush out, like you say. But if it doesn't hold, then I'll expect it to push higher, maybe get back up above 72. But if the Fed is super hawkish, this could be down 65s in a few weeks. It's that much of a switch. Flip the switch, and this could go any way.
Okay. Who else is around that wants to join the conversation?
Hello.
Jump in.
How are you?
Usual, all right, mate.
You guys doing good? Yeah. So we have the Fed tomorrow. It's recently every Fed meeting is becoming more and more important. Tomorrow is a big one because, as Ryan said, and I think you said as well, Dale, we're expecting 50. But the question is, what do we expect after that? What does the Fed do? Is the negative GDP print enough to get them to have a slightly less hawkish tone? I don't think so yet. But excuse me, but I think it's clear that the U.S. economy and most Western economies actually cannot withstand high yields and high rates for very long. I think we can all agree on that. And 10-year US is now at 3%. Inflation doesn't look like it's slowing down, neither does it. So theoretically, the Fed should be pedal to the metal, 50s for every meeting going forward until until they start seeing inflation coming down. I think we all know they're not going to do that. They're gonna do a 50 tomorrow. I think that's almost a certainty now. They don't want to shock the markets in any way. But what happens after that? And the same question actually applies to the Bank of England on Thursday. They're going to be hiking 25, but the question is, what do they tell us? And so my view is still the same. I think as long as inflation is this high and it doesn't look like it's turning, especially the Fed, they really can't do anything else, and they want to get as much in as they can before markets start collapsing. And yes, the S&P has gone down from, what was the highs, 4,800 or whatever it was,
48.40, I think.
Yeah, to 41.50. I mean, percentage-wise, that's not a
48.20. Yeah.
Yeah. So what is that? Almost 20%. So it's not a negligible drop. But as I said before, I think we need to get to something like 3,500 before the Fed actually start making some noise about it. So until then, my bias is the same. I think I said before for 10-year US, as we were getting to 290, I said, look, I think there's going to be a little pullback. It's only natural. I thought the pullback would be a little bit deeper. It only got to, what was it, 270 or something like that. And now we're breaking 3% again, or not again, but we're almost at 3%. So I think this is going to continue. And as long as yields go higher, I really don't see any scenario where stocks rally. I don't. Interestingly, Paul Tudor Jones, some minutes ago, I think it was, unless the headline I read was from earlier, he said on CNBC that there's clearly no reason to be holding or stocks or bonds or something like that. I can't remember the exact words he said. Maybe he said, we don't want to be holding stocks or bonds, but basically he just said, not the assets you want to be holding.
Crypto?
That's a good question. Because if you're holding cash, you're getting eroded big time. If you're holding crypto, well, that's a risk asset proxy, high beta one as well. So, if you want to take a view on equities, a leveraged one, you might as well hold cryptos. So if he's not bullish equities, I don't think he's going to be bullish cryptos. So what do you hold? That's the $1,000,000,000,000 question.
Well, his background, his family was in the cotton business, so maybe he's in the eggs. They still have pretty strong trends. They look like they could correct, like here's beans and corn.
Yep.
And wheat, with Russia. Wheat actually has had the biggest correction since the invasion. But I mean, stuff is holding up better than financial assets.
Yeah, you want to hold real stuff.
except for silver. I want to ask you, Stel, if I think we could get a pop from here, pretty oversold. But when I look at the daily now, that's a weekly. The weekly, it sure looks like there's a pretty good opportunity of cleaning out,
Yes.
getting these sell stops here.
Yeah.
It's just and get that flush.
Yeah, I think you're
that
absolutely
we were looking
right.
for. Yeah, that we were looking for here, but we got this instead. So it was like a delayed fuse, but that we could do it now.
We know. I think you're absolutely right. We know how the markets.
Yeah.
Algos and you can see. I mean, going to be stops below 2160 or whatever that is. Those lows.
Yeah, like,
so we're that
34.
close. Yeah, we're that close to them that I wouldn't be surprised at all if we see. Hold on. Sorry, my internet connection went down for a second. Can you hear me now?
Yeah,
you're
clear now.
Yeah. I think I wouldn't be surprised if we see a big flush below there, take those stops down, maybe during Asian trading where there's very little liquidity. We've seen it happen so many times. So I think it's a very, very high possibility now to see that before we go higher.
Okay.
Again,
well, a lovely looking support level though, eh? If you're talking perfect text, that's what you like to see in a support level. Lots of touches, lots of holds.
Yes.
Around on that line. Lovely.
Yes. I think the ideal scenario would be break that support, take all the stops out, then break back above, and then I think that will be a nice little springboard. So unfortunately for silver, patience, yet more patience. So
Julian showed a pretty interesting chart yesterday: silver and the dollar, and at major peaks and major lows in the dollar. Even though the correlation vacillates during the trip from high to low, they both bottomed and topped around the same time. So maybe that's what we should be looking for. And, I'm not sure if we're there yet. Maybe, I'm kind of thinking that maybe the dollar doesn't bottom. What was the strongest one where everyone was hiding was Aussie, right? Because Euro was crapping out, cable's crapping out, everything. And that maybe we have to clean out the bulls here, just like we clean out the lows in silver. And, this would be a back up the truck kind of play, don't you think, down here?
Looks like they're definitely all aligned there. So one goes, I think they all go. So yeah.
How's Steve Volge doing?
He's still has that awful accent, but yeah, he's fine.
Oh, good. You around, Steve? You don't even check in.
He's not. I don't see him.
Someone asked me if he was Russian once.
He's always rushing.
Yeah. All right. Well, Blake, any pre-Fed prep?
Well, I was going to let you guys just ramble on today and talk about whatever you guys are going to talk about. But
all right,
it's actually been a pretty quiet session, and I've been looking at the precious metals here, and and thinking about like the dollar ahead of the FOMC tomorrow, and really, I think there's going to be some, position squaring, and right. if you see like silver, we've come right into that Gartley pattern. I was referencing this last week. We actually overshot it yesterday, and I think that if you buy the silver market at 2250, this is the good risk reward. Same with gold. The 200-day moving average is right below, but I'm really more focused on. Excuse me.
Euro.
The euro. And the euro, I just told everybody this morning in the chat room. And by the way, just so you guys, if you're not in the ForexAnalytix chat room, I'll just show you what I did. The trades room said, hey guys, picking up the euro dollar, picked up the euro dollar long. I got stopped out of the Aussie dollar last night. Here's my open positions. And picked up the euro, and then I, scalped out of it for 25 pips, just over the course of 15 minutes, just when it was was rallying. But those are the types of things that we talk about in the chat room, that's just the trades room alone. So you guys can kind of see what I was doing here. But the reason why I was buying the euro down here is just from position squaring reasons. It's like, here we are ahead of the Fed. You know that the Fed's going to be hawkish. I don't know how they cannot be hawkish, right? Yeah. So based on that alone, you know that the Fed's going to be hawkish, yet the dollar's gone so far. So I think the dollar is at risk at this point. If for some reason Powell is hawkish, but not hawkish enough, right? I mean, how often has that happened? Like you walk away from the Fed meeting and you go, well, okay, he was hawkish, but just didn't give everything that the market was expecting. The risk will be that the euro gets a, pivot off the 105 and we start trading back to 107, 108. Now, the flip side to that is that, he could be way hawkish and, be more hawkish than any of us ever expected, and the euro could break down. But between now and the time the Fed actually meets and makes their decision on rates, we could very easily be in a position squaring mode. Now, I'm not in the mood to be, at this point in time, I'm not in the mood to be long the euro. We see a recovery and the euro gets to the 106 level, and then I move my stops to break even. I'm not in that mood right now because the dollar has had such an aggressive move higher that I'm worried that the dollar could extend further. So I'm not, I didn't even want to go there, but I know there's a lot of people that will, and they want to do that, and they want to take that, they want to be able to take that trade. And the fact is, everybody has very hawkish expectations for tomorrow. And if they don't deliver, then not quite as hawkish as they could be, the euro is at risk of a bounce. And then, if the euro is going to bounce like that, then you have to think that the, gold and silver market are also at risk of getting a recovery, soon too. Here's, silver, and then, gold, we probably will end up trading up towards, like in gold, I could see us by the end of the day, probably trading around 1880, maybe 1890, maybe even a little higher than that. Silver might trade back up towards, 23. So that's what I'm looking at right now. And then also, I don't know if you guys just saw it, the dollar yen just took a little nosedive too. I mean, the dollar index is bullish, but we're bullish while we're above 102.80. If we get below 102.80, then that's going to be a risk of a big reversal. Okay. So what do you guys think about the Fed and expectations going into tomorrow, Ryan, Stelios?
Not much more than we've said already. I think the market's maybe going a bit overboard with its expectations for hikes. The bullard crowd, let's call them that, 75, 100 pip hikes. Mm-hmm. But as we discussed, I think a lot of the news will be in the QT and how much they're going to suck the purchases out of the market, how quickly they may do that, how the size they might go at. But personally, I think that the market knows this is coming, so it's a bit like when we got to the end of QE and the final. How long are they going to take to end QE? How much they're going to go by? It's going to be a similar situation to that. So we probably see a knee-jerk reaction based on whatever they say, but whether we get a big, huge move and a lasting move in stocks, I'm not as keen to think that will happen.
So the question is, looking at the S&P, and Stelios, I don't know if you have an opinion of the Fed, but looking at the S&P, we had a push below the 4,100 level, just and it's just like the market, right, to really suck the market in on the short side on a low volume day, just kind of push all the stops through the 4,100 level and reverse. But it really is going to take a very hawkish Fed to get the stock market lower. I mean, what are your thoughts here regarding the Fed, Stel?
Well, like we said before, we're pricing a lot already, and you're right. I think it will take a hawkish Fed to get stocks lower. Actually, not so much a hawkish Fed. We need yields to keep going for equities to go lower, and I think we're close to very important levels in a lot of instruments. Like we looked at some dollar pairs, like and metals as well. So tomorrow's Fed could really push us either way. That's why I'm not doing anything ahead of it. Can the Fed be as hawkish or more hawkish than expected? Of course they can, but I think the chances of that happening are now starting to diminish as yields rise and as stocks fall further. As I said before, I don't think we are there yet for them to start getting nervous. But for them to come out more hawkish than expected, especially with that GDP, negative GDP print, I find it difficult to see. Then again, they have surprises in the past, but the surprises are usually on the dovish side, as most central banks like rates to be low, right? And stocks to be high.
Yeah. It's going to be really interesting to watch the S&P. I actually think that push below the market, and some of you actually, I bet not everybody here listens to Jim Welsh and from Macro Tides. He was talking for the last several weeks, for the S&P to trade below 4,100 and then reverse to all-time highs. I don't know if that's going to necessarily happen. But man, I'll tell you what, we did push below that low. I didn't think we were going to get there until after the Fed. We got there ahead of the Fed, and then we saw this reversal. And this could be setting up for a push back towards 43, 4,400 at least, or maybe even the 200-day moving average. So I would be very skeptical about being short risk at this point. One of the other things that I wanted to say is if tomorrow, let's say the stock market rallies following the Fed, whatever the Fed does, the market likes it, whatever that is, you fill in the blank. If that's the case, I am shorting dollar max. This is the one currency that I am buying emerging market currencies tomorrow if the stock market has a full-on recovery, because we have seen these emerging market currencies like the Mexican peso, the rand. They actually have acted a lot better, based on what we've seen. I mean, we've seen risk appetite come off quite aggressively, and they actually don't look bad. So, that's the kind of trade that I'm going to be looking at going into the next couple of days. If stocks recover, and I have to say, the stock market looks set up for a nasty reversal of risk here and pushing higher. Like, I wouldn't want to be short equities going in tomorrow. I just wouldn't want to be, not after what happened yesterday. So anyway, just kind of Gorkum says don't even think about the Turkish lira. That I would not think about. Who has the when is Erdogan, when's he gonna, how old is he? Is he getting close, Stella?
Getting close. Come on.
I mean,
he's not that old.
He's you Turks and Greeks out there, you guys live to like 110. So I mean, how old is he? I mean,
70. Gorkum says around
40 or 50 years, I think.
Gorkum says he's around 70. Sounds about right. So you might have another 10, 15 years.
No, like I said, you Greeks and Turks live forever out there. It's the Mediterranean lifestyle. Anyway, hey guys, I wanted to say, I know, and by the way, you guys stick around because Gareth Soloway is coming up here in a second. He'll
I don't see him. I'm hunting Gareth down. Forex guest hunter is
Forex guest hunter is on the all right, well, we can chat a little bit. And do we have any data coming out? I'm sorry, I should have.
Nope. Zippo.
What's that?
Nothing.
Okay. Well, I was just gonna mention, since we can talk a little bit longer, but I was gonna mention, hey, if you guys haven't checked out ForexAnalytix, make sure you do so. check out our webinar sponsors, Forest Park FX. They have been sponsoring us and working with us for years. They're kind of like the concierge of FX brokers. Just let them know that we sent you. And then at the very bottom, there's a way you can contact them. You can contact them right on Skype, or email them at brokers@ForexAnalytix. They actually responded to that particular email. Also, make sure you check out Trader Funding Program. And if you guys are trading, why not have a community behind you when you're trying to access larger trading accounts, and you're trying to proprietary trade? Why not have ideas? And that's what the ForexAnalytix community is. So make sure you check out the Trader Funding Program. If you guys,
machine.
Are trying to access larger trading accounts.
He's here.
What's that? Is he here?
He's here now, buddy.
Okay, cool. All right,
and
then I'm gonna let you go.
idea.
And you guys stick around for Gareth. Gareth, I'm sure, is going to give us a little update. Matter of fact, when he pops on, I don't know if he's Gareth. Are you here? Can you hear us?
I'm trying to promote him to panelist.
Okay, I'll start you off,
There he
Dale,
goes.
with Gareth.
Go ahead.
I'm sitting there
He's
watching
there.
Bitcoin, and I know Gareth has been more of a Bitcoin bear. One thing that I have to say is I don't like the price action in Bitcoin. It's trading extremely heavy right now. And, I look at it and I'm like, man, I think this is at a risk of pushing below. And I know him and I have been looking at the same channel supports for a while that come in around 35,000, somewhere around there.
So what's the verdict, Gareth?
Yeah, I mean, I'm in the
Hey,
same
Gareth, how
camp.
are you?
I'm doing really, really well. Thank you guys for having me. How's it going?
Good. I'm actually going to pass it over to you and Dale. I just wanted to say, I don't know about you, the way you're looking at it, but man, I think Bitcoin's trading real heavy. I tried buying Bitcoin after that BlackRock bid came in. I think it was right here around the 40,000 level, and we spiked up to like 42, 43,000. And it came sliding back down to like my break even point. And I just said, you know what, I'm done with it. But it's trading heavy. What are your thoughts?
No, I'm right in the same camp there. It's hammering on that kind of trend line there. If you connect the lows from January and the lows from I believe it's late February, and it's barely holding on. And what's interesting is that we always notice that you're always at a pivotal level going into a pivotal event, right? So you have the Federal Reserve tomorrow, and
Right.
it's hanging on that trend line right there. And so you're either going to get a slightly less hawkish statement or just the hawkish that we're expecting. And it probably is going to either tip Bitcoin over the edge, or maybe it can save it for a little bit of time. But I think inevitably it's going to go lower. I mean, the channel is a bearish flag pattern. It is what it is. I've learned not to question the charts in my career, because every time I question it, I'm wrong and I lose money.
Well, that's the one thing when you do question yourself, a lot of times when you know what's right, that's what happens as a trader, right? I mean, it just does. So, hey, I'm going to pass you over to Dale. I want to say, great to have you here. I love having you on Trader Summit as well. You're a lot of fun to listen to. You got a lot of great ideas. So, everybody, make sure you stick around. Dale, it's all yours.
Okay, Blake, team, great job again today, like every day. You know what it's like to have a dream team, Gareth, right?
Absolutely.
I mean, it makes you better.
Yes, it does. The more great minds can get together, the better the information always.
So did you want to share your screen today, Gareth? Or
yeah, absolutely. Let me pop it up right now here.
And while you're doing it, everyone, Gareth is the CEO and president of In the Money Stocks, ITMS. And last time you were here with me, Gareth, you had that trend line in the S&P that you thought was going to be broken.
Yeah.
And it was broken with a vengeance. And, we've had that move down. That was a great call. And that was early in the year. And you had that line for weeks and months before. So people pay attention to your charts now, man, because everyone's looking at the Gareth lines.
Nice.
All
So
right.
you're right. We did break that. It was a very kind of this very tight channel that was trading here. And in fact, I took it off my chart because I don't like to have too many lines on the chart, but it was right up under here, I remember. And then it did
You should have
break
made
down.
an NFT out of that chart.
I should have. You're right,
All right,
man.
all
I
right,
got to
go
even
ahead.
learn how to do that kind of stuff. I'm so behind the times.
Yeah, well, I still don't even know what it means, but I use it in my act. Okay, so all right, so here we are.
Non-fungus token. I think something about a fungus. No, I'm just kidding.
All right, so here we are sitting at major support going into the Fed meeting here. You think we're going to break down? I mean, sentiment saying we should have a rip your face off rally.
Yeah, so it's kind of interesting here, right? I'm going to get a couple of these trend lines out of here. So yeah, I mean, we did hit support yesterday, and we saw a nice reversal in the S&P 500, and a lot of people were kind of surprised, like, oh, why did we have this? And I think the bottom line is you had this pretty steep decline over the last 2 weeks, and you have some shorts out there that are saying, okay, listen, ultimately, we think the market might go lower, but I don't want to have all my shorts going into a Fed decision. That's a lot of risk on the table. So it was a little bit of a de-risking, saying, okay, let me cover some of my shorts and ahead of the Federal Reserve. And I think that's why you got this nice little bounce yesterday. I also think there's a hope that we finally tagged 3% on the 10-year. And I think there's a general thinking, and I'm actually in this camp in the near term, that we should get a pullback on yields. So the hope is maybe that's telling us the Fed will be slightly less hawkish tomorrow in their statement, and the market is anticipating that a little as well. And so I ultimately think rates could go higher, but usually around these even numbers, you do get some sort of retrace back down. If I show my my 10-year, let's look at the 10-year yield chart here.
You have some divergence in the 10-year.
Yeah.
And also yesterday when S&Ps and NASDAQ was making a new low, the semis put in a higher low.
100%. That's a great point. I saw that as well. And early in the day, I was thinking to myself, okay, that's interesting. Usually the semis are a great leading indicator, and they sure were yesterday as well.
Yeah.
So on the 10-year here, you aren't quite to this double top here from 2018, but you're pretty darn close. But I think ultimately, usually when you see a breakout, and you can see this trend line goes all the way back to 1987, which is just kind of interesting since that was the last time we had that big crash, the 87 crash. But the trend line itself, usually when you break out above it, there's at some point, whether we go up here or whether it's right here, you see kind of a retrace and test of that line. So I could see, maybe yields going a slight bit higher to 3.15 or something, but ultimately a pullback to 2.5, 2.55, somewhere in that vicinity could be in store. And I think that would be short-term positive for technology stocks. Okay. The only negative is the pullback because the Fed is slightly less hawkish than the market anticipates, or is it because the economy is weakening so quickly that we're going into a recession? And in which case, longer term, that's really bad for stocks, right? It means lower profits and all that fun stuff. So it's going to be interesting to see here how this plays out.
And then followed up by NFP on Friday, where if it is a weak number, that could definitely add fuel to the fire for lower yield short term.
Yeah, you're 100% right. And I would dare say that I always am a believer that even though the month, I mean, we ended the month, but I'm always a believer that the Federal Reserve sees these numbers ahead of time, or at least the rough numbers, maybe not the exact final numbers. So basically, when we hear from the Fed tomorrow, if they're slightly less hawkish, that might also mean that it's going to be a weaker number on Friday than anticipated.
Interesting. Okay. And the commodity pullback we've had, a big break in gold from 2 weeks ago.
Yeah.
And silver even worse.
Yeah. So I think gold here, this is doing exactly what it should do. So let me just kind of clean up my chart. So you had two trend lines here, and this is the weekly. So we're going back to 2020 on this chart, but you can see that both of them basically were right in this area around 1850. And we broke out. So this is an actual legitimate breakout on the chart that we had early in kind of February and March. and it coincided with the invasion of Ukraine.
Right.
But following, just like we were looking on the yield chart, this is almost like a fast forward on the yield chart, where what you expect is you kind of expect a retrace into this level, and then it gets its next legs under it and starts to take off. So I'm in the camp that, there might be a little bit more downside, but it's very minimal at this point, maybe to 1825, 1850 area. And then I think the next leg up on gold begins. I actually did buy silver via SLV over the last few days. And that's basically just looking at, let me go to the daily chart here.
I know.
But this is an incredible literally no green candles on the daily chart of silver for the last, 2.5 weeks here, which is incredible to see. And look at all the support you're coming into down here. So, I'm not necessarily marrying this position for the long term, but on a technical basis, I got to believe there's going to be some sort of technical bounce down here.
Aren't you a believer that Mr. Market's such a mean guy that everyone who's looking for a market direction gets shaken out before it happens? And wouldn't that include a stop hunt under 2150 of those lows in October and December?
Yeah, so the market does have a way of doing that, 100% right. And what I do is I compensate for that fact, and I've learned that the hard way in my early career more often than I'd like to admit.
Using less leverage.
Yes, correct. So for instance, I'm only in about 2% of my portfolio in silver right now. I'm willing to go up to probably 6 to 8%, right? So I'm basically dipping the proverbial toe in the water, knowing that if they try to shake and we go down here, I can add a little bit and, right in this vicinity here, just in case it is a shakeout.
Okay. Yeah. Nice looks. Any view on the beast? And that's US dollar yen.
Yeah, that is unbelievable.
It was unbelievable to me. I've been around for a couple of years.
Yeah. You don't see moves in the currency market like this very often, and I'm sure you can attest to that, Dale. It's remarkable. I don't think it's going to last personally. If you go to the DXY itself, you should be, at least according to this chart, you should be right around a pullback area. So you can see going back to December 2016, we were right at this high. And again, what I look for is not just highs, but how does it get there, right? So if it meanders slowly and it pulls back and it kind of a winding, gentle river, well, then the pullback is usually very gentle. This happens to be one of the most dramatic moves up in the dollar we have seen in a long time. So I would actually expect a pretty dramatic pullback, maybe in this range right down here to the 99.50 area on the DXY. So I do think that we are due for some sort of pretty sharp pullback, whether that's some sort of resolution at some point in between Russia and Ukraine, or if there's some other event. But I do think that it's important for investors to just notice what's going on. There's slowly starting to be this kind of movement away from the dollar by China. China's now buying Russian oil in yuan. We've heard that Saudi Arabia was now accepting oil in yuan as well. So I talked about this as much as 6 to 12 months ago, how when China introduced the digital yuan, I right away said, okay, guys, this is them going on the path of wanting to have the reserve currency of the world be the digital yuan. And honestly, I think we're seeing more and more of these little things. So again, this doesn't really speak to what's currently going on with the dollar, because the dollar is reacting to fear, it's reacting to uncertainty, and it's still that store of safety for the global markets. But I do think over the next 5-10 years, you will see a weakening consecutive, just constant weakening of the dollar as more people shift away, or more countries, I should say.
Okay. Highest conviction scenario we'll wrap it with. And it could be what we talked about already.
Yeah, so
I know you're like that because you're a discretionary trader, and I know when I go over charts, it doesn't mean it's going to be the one that works, but I have degrees of conviction on different analysis. That there's some that you can almost taste it. So is this yours right here? This pullback in gold between
I think this
and
is
a quarter. Yeah.
This is the buy that I think is going to be the key. And again, I think 1850 to 18 and a quarter in this vicinity, if you can get it down there, I think it's the performer that I called it as the best performer of 2022. I'm still in that camp, and you're getting a second chance to pick it up if you didn't when it gets down there. And the concept here for me, the forecasting is that basically The market's beginning to think the Fed is going to get inflation under control. I think by year end, we clearly see that even with higher rates, inflation maybe comes down to 5 or 6%. And then we're going to see gold. We're going to see gold continue up as inflation sticks around 5 or 6% for the next many, many years. And we actually see a recession come into play. So I think gold is the safety play here. It's been an underperformer for so long. I think it finally has that 1970s type move to the upside. And I think that is my highest conviction over the next 6-12 months.
So then would you be expecting a continuation of the move up in the gold silver ratio? Because definitely, you know, the ratio shown the relative strength in gold compared to silver in the last,
that's
almost
like a
breakout last week.
Yeah. So I actually do think silver starts to participate. Obviously, the industrial side of silver is what's keeping it under wraps a little bit because people are starting to fear a global recession. But I actually think that the longer you see, you know, these inflation numbers stick around, the more people are going to say, okay, yeah, gold is the pure play, but all these commodities are going to see higher moves either way. So I do think that maybe it sticks around this area. I do think gold again is the pure play of the kind of the no-brainer one, but silver I still think actually does relatively well over the next 12 plus months.
Okay, Gareth. You want to show your website and where people could find you?
Oh, sure. That would be wonderful. Thank you. So inthemoneystocks.com and is the place. And here my name is right here. That's my service underneath it, verified investing alerts. And basically what I do is I put out trade alerts, trade signals. As I act on them, I put them out and I give
your deck, man. Where is it?
Oh, the deck?
Yeah.
Oh, you mean for the fund?
No, on the last page that you showed.
Oh,
the deck.
Gotcha. Gotcha. Oh yeah, I wish that was mine. Not quite that nice. I do.
You know, I see. I have my own jet. I have a few pictures I could Photoshop that shows me flying the jet.
Yeah.
Had to meet my clients and a helicopter.
Oh yeah. Don't forget
I land on top of buildings.
The Lambos and Ferraris and everything in the garage.
Don't you want to be like me, except not as old? Anyway,
if you're like, I don't know. Now I've got the kids and I had to get rid of my sports car because it just doesn't. It's not practical anymore when you got a 2-seater and you got four people. But yeah.
Anyway, it's always great talking to you. I love your looks. Your charts are real clean, Gareth, and really appreciate you coming in today. And
awesome. Thank you.
Say hi to my buddy and trading warrior brother Nick. And
will do.
You know I always root for you guys.
Yeah, and thank you so much, Dale, and thank you for having us on. And it's always a pleasure to give you guys my views, and I appreciate it.
Okay, everyone, Gareth Soloway, and you could follow him at ITMS. Do you have your own individual Twitter handle?
Yeah, at Gareth Soloway. So just at my first last name. It's super easy to find me there and keep plugging away. I post usually a couple times, really some interesting stuff on there. So thank you.
All right. So may all your calls be answered, buddy.
Thank you. You guys too. Thank you.
All right. Gareth Soloway, everyone. Hope you guys have a good turnaround Tuesday. Gareth was very efficient at giving a lot of views in a fairly short period of time. And this is why we bring in great guys like this to, expand your universe of ideas. You could join the team in, what are we talking about? 22 minutes. Yeah, call it that. I can't even do the math now. Anyway, thank you, everyone. Hi, AJ. Anyway, I'll get my calculator out and I'll figure out. Let's see, it's 12 and 27 minutes. 27 minutes. You could join the team on the morning edge to get the edge for the rest of the day. Get some good sleep tonight because we'll be reacting to reactions tomorrow, right, guys? Adios. Remember, don't just count your pips, count your blessings. Do the right thing today and tomorrow takes care of itself. Adios.